Okay. Top three mistakes of day traders.
I would say the top three mistakes of day traders. The first one is not using a stop loss. The second one is overtrading, where you think the more trades you do, the better. That's absolutely not the case. Some of the best traders I know spend long periods of time just sitting and waiting for everything to align in their strategy. And some of them I know can wait days before they trade, and they just have this incredible patience to sit and wait. The third thing is to avoid revenge trading. So if you don't use stop losses, your losses can get out of control. That can then snowball into a situation where you're revenge trading to try to get the losses back quickly. And that will pretty much guarantee you wipe out your account.
How long does it take to be a successful trader?
To be a successful trader can take years, and it actually should take years. This isn't a skill that you're going to learn overnight, not a skill you're going to master in 6 months. So be prepared. I've trained a lot of traders now, and the ones that succeed are the ones that are very careful, methodical. They practice, they build strategies that suit their lifestyles. They're not in a hurry. They're happy to build a data set of 100 trades in order to examine their strategy. So if you think you're going to get rich quick overnight, forget about it. Find something else to do. The thing that you will discover as a new trader is you will learn an awful lot about yourself, and you might discover things about yourself that you don't like. You'll find what drives you. You'll find your emotional weaknesses. It's a real journey of self-exploration and self-understanding.
How realistic is a 6% monthly return by day trading?
A 6% monthly return is actually quite realistic. My strategy is to bet 1% per trade. If I do 3 trades in a day and I have 2 winners, those winners might return me 4%, because obviously I'm hoping to risk 1% to make 2%. The one trade that I lose, well, then I'll give back 1%. So I could be up 3% in a day. Now that isn't going to happen every day, and you will have losing days, but it's not unrealistic to have a 6% win in a week, let alone a month. In my 5-day challenge, I get my followers to focus on the psychology of trading. Once you have an understanding of technical analysis and you believe that you can identify low-risk trade opportunities, it's then important to learn trade management, account management, risk management, so that you have some discipline. Once you've done that, you're not ready to be a trader yet. You absolutely have to understand the psychology of trading. You have to understand how you react. You have to understand the greed and the fear that drives you. So in my 5-day challenge, I really do a deep dive to explain the psychology, the thoughts that are going through your head, the things that you need to control, and some hints and tricks that I use to control my emotions, to maximize my profits and minimize my losses. So if you sign up for my 5-day challenge, you'll receive a video every morning for 5 days, and I will guide you through all the 5 important stages that you need to master if you want to completely control your emotions when you're trading.
In the first day of your trading challenge, you explain how to establish your own trading rules based on your experience.
In the first video of my 5-day challenge, I will show you how to establish your own rules of trading. It's really important to have a list of rules of trading. Some of my students create this list and they read the list of rules every morning before they actually start trading, just to ensure they just keep their discipline throughout the day. It's too easy as a human being to lose control of yourself when you're trading, when there's money at stake. In the second video, I help traders to develop the right mindset, and I explain my theory of mental capital, which basically describes your state of mind. If you're feeling confident and you're adhering to your strategy, then you will have strong mental capital. In other words, you'll feel confident. You will identify a low-risk trading opportunity and you won't hesitate to execute it because you trust yourself to do the right thing. Enter at the right level. You're not going to chase the trade because of FOMO. You're not going to miss the trade because you're worried about taking a loss. You'll take the trade. You'll limit the loss. You'll have a good profit target. When you do this, it becomes almost like an automatic reaction after you've identified a low-risk trading opportunity. And it just continues to build confidence. There are 2 aspects of trading. You need to preserve your monetary capital, and you also need to preserve your mental capital so that you have money to trade and the confidence to build that monetary capital. Sign up for my 5-day trading challenge and get the first video of the series now.